Hi, welcome to the Baker Boyer Monthly Market Update. I'm Ted Cohan, one of the senior portfolio managers here. What we're going to talk about this month is a few different items. We'll start by talking about the overall market, how it's done so far this year, looking at both the stock side and bond side, and also U.S. and international. Then I'll touch base a little bit on tariffs and potential effects on the market there. And then the last thing is we'll talk about just a couple slight changes we're making to portfolios for existing clients here at Baker Boyer. So I'll start with just kind of talking about the markets and what we've seen so far this year. I do want to preface that by just saying I'm doing this video, filming it on March 5th in the morning. And I think with the volatility we're having in the market, it's important to know what day I'm filming this, because if you're watching this video a few days later, a few weeks later, depending on what's gone on in the market and the news, it could be at a different level. So as of today, what we've seen so far on the U.S. side, when we look at the overall broad-based U.S. indexes like the Russell 3000, the S&P 500, we're down about 1.5% to 2% right now is where we are as of today. The international side has done a little bit better. International emerging markets is up close to 2% so far this year. And then the best performing area has actually been developed international countries. They're up a little bit over 5% so far this year. So the international market has definitely done better than the U.S. so far, again, through today. On the bond side, bonds have done pretty well so far this year. The 10-year Treasury, which is kind of one of the drivers of how the bond market does, started the year at around 4.57 on the 10-year yield. It's around 4.2 today, and what that means is price appreciation of bonds has gone up a little bit. So you've gotten your dividend yield, and then you've also gotten a little bit of appreciation on your price. And so our core bond funds are up about 2.5% to 3% so far this year. So really bonds and international, again, have been the positive. The U.S. market has been down a little bit. If we would have done this video 3 days ago, I actually could have said the U.S. market was up. So we've had a little bit of a downward trend the last few days. And some of that, again, gets back to what I was going to talk about in tariffs. There's been a lot of talks on tariffs ever since President Trump took over. A little over a month ago, he came out originally and said that China, he was going to have a 20% tariff. Mexico and Canada were going to be 25% each. And then he paused Mexico and Canada's for a little while for some negotiation with them. And then he did add them in a couple days ago. And that really has kind of led to a little bit of a sell-off in the market, just because the market really doesn't like uncertainty. And right now there's a lot of uncertainty on the tariffs. And when we look at kind of pre-tariffs, coming into the year, our expectation and kind of economist expectations really on the market were probably continued just sort of slow growth, somewhere in that 2% continued GDP growth, still, inflation in that 2.5% range. Also on economists, when you look at tariffs, if they stay at the levels that they're at now, you could see a little bit of an increase in inflation, a little bit slowing down in the economy. And again, that is if we stay at the percentages we are now. I think this is a subject we're probably going to continue to talk about most likely in future market updates, just as we get to a point, if we get settled a little bit more as to where tariffs do end up, if they are at this level, where other countries put tariffs on us. So I won't get into really any more detail on tariffs right now. And again, most likely we'll continue to talk about that in the future as we get maybe a clearer picture on where tariffs percentage-wise end up. And then the last thing I just want to talk about is for existing clients, some changes we're making to the portfolio, which they're not reactionary to what we're seeing, tariffs or changes. We're always investing for the long term. So these are ones we've been talking about for a while, and they're just slight changes. One of them is the cash position in a lot of clients' accounts has sort of been built up over the last year. As we let dividends and interest come into accounts last year, the money market was paying a really good yield. It was paying over 5% for a lot of 2024. So we weren't too worried when cash built up from the normal 0.5% to 1% range up to 3-4%. We do want to get that invested now into each client's portfolios based on their asset allocation, as money market has come down a little bit. And then the other change is we've just made a slight change to some of the bond portfolios, just trying to get a little bit higher yield and a little bit more total return. So you might see a couple changes in portfolios over the next statement or two for existing clients. So, and with that, I'll wrap up this monthly market update. And as always, if you have any questions about what I covered today or anything else, please reach out to your advisor, portfolio manager, and happy to reach out to you. Thank you.